The investing angle is key here because it seems as though people still shun the United Kingdom for what's happening with the Brexit uncertainty. Does that persist going into the latter part of the second half of this year?
Well, undoubtedly, Brexit is now serious. It's getting serious. It's had a lull. It's warming up now. But that's not the same as making the UK uninvestable. So today's announcement, whoever wins, there seems to be a clear favourite, whoever wins, everything will change and nothing will change. The nothing that will change will be the state of UK finances, the state of the negotiations with the EU. There are plenty of things that can be done from now on, and with one new leader in charge, we will start to see that sort of stage where promises sort of hit reality, and at that point, I think we'll start to see some movement. But it doesn't make the UK a bad place. We've had 3 years to get ready for Brexit. Markets being what they are, discount the event ahead of it, and there are some clear signals coming through.
David, is there any such thing as a no-deal Brexit? No matter what, the UK is going to have to figure out what to do with certain key businesses and industry groups with its largest trading partner, which is the European bloc. So what exactly does that mean if there is a no-deal Brexit?
Well, financial markets are telling us that there will be some sort of deal, and the basis of that deal is the fact that this is a parliamentary democracy that's been tested over centuries by, and precedents exist, conventions exist. What we know about Brexit and what's going to happen now is that this is unprecedented. So markets are taking the view that parliamentary democracy in the UK is strong enough to sort out an answer. It just doesn't know quite what that answer is. That's why the pound is at a 27-month low. That's why the UK equity market is at a 3-point discount to the rest of the world. Investment managers around the world are underinvested in the UK, as am I, sitting here in London as a global investor. Quite a reasonable position to be in and to take ahead of all of this. But that doesn't mean that that doesn't generate attractive areas. And I wouldn't be at all surprised to see international investors with a bit more certainty, with some progress, actually looking at their underweight UK positions and starting to work out whether they don't need to now reverse those.
So David, let's take this conversation to instead across the British Channel. Let's go across the Atlantic. U.S. investors, UK investors. Do they need to fear anything that can happen between a possible negotiation on trade terms bilaterally between President Donald Trump here and whoever the Prime Minister is in the UK with regard to the U.S.-UK trading relationship?
I don't think they should fear it. I think we've been living with this uncertainty, and I think I put it in those terms rather than fear. So we will deal with whatever comes out of all of this in terms of trade relationships, undoubtedly. There's too much at stake for decisions not to be made, for compromises to be reached. I think in the very short term, the transition of power from Theresa May to, shall we say, Boris Johnson as the favourite, but whoever is going to be the next Prime Minister, will lead to political fallout in the UK. And if that isn't smooth, it depends on how you define smooth, then this may have an effect upon, or an adverse effect upon sterling. That bothers, I think, me more than what deals may be done in the future. And there are plenty of permutations on that side as well.